It's hump day, and we're back with another episode of Go FUD Yourself. JD Gagnon here, my good friend Kiara. How you doing? What's going on?
Are you only wearing the chain during our stream, or do you wear it all the time?
Yes. Nope. Just the stream.
Just keep it on your desk. You have like a nice holder.
Yeah, maybe it'll become synonymous for me, like having this big chain. So then, like every time I go present or do anything,
yeah, that's what I want.
A big gold chain. But the problem is gold doesn't work with everything. Like I've got gold belts and shoes and shit like that, but I also have a black chain, and maybe I'll have to order a white gold chain so that I've got all of it.
And then like a rose gold chain.
Can't do. No can do's either. Rose gold. I do have a rose gold ring though. Anyways, this is nonsense. I don't think anybody gives a shit about my my jewelry purchases.
That's true. You know what people do care about is the SEC. You know what I don't care about today is the SEC.
You know what? I mean, hate it or love it, it's the situation we're in. So we're going to tell everybody all about it.
To me, it's just like so much of the news is glossy, right? Like we already have the news. Yesterday, Binance and Coinbase were both sued. That's the news. We don't have extra news about it right now. But nevertheless, it's like every news station, that's all that they're covering. Anyway, we're going to talk about the SEC. And then because of my great disdain for it, we're going to talk about how it impacts DeFi and degens. And then I've got a couple of other small things about like Cosmos and Swift and whatever that we've been putting off until Wednesday, because Wednesday's supposed to be our degen day.
Sweet. What episode is it?
I don't know right now.
Okay, I'm pretty sure it's 77. But
no, we definitely did 77 already.
Then it's
100p.
Gotta be 78.
No, I think we're at 79 now, because it was 77 last time our Mr. Producer did the banners, which was like a while ago.
All right. Well, it's 70 something, most likely. All right, let's do it.
80. Nailed it. We're getting really good at logging on in the period of time.
During the video thing, right? Oh, yeah. I forgot to do the shout out. Sorry for the Twitter Spaces people that can't see this, but wearing the Moonwell merch today. Good friends at Moonwell. What's up? Exciting things going on over there.
What's up?
Lots of activity swirling around. What's everybody gonna do? You know, regarding.
Exciting.
Yeah, it is. So anyways, shout out to Moonwell. Okay, we got tons of shit to talk about. Let's jump right into Gensler et al. So
it's Al. Okay, so the SEC, the SUEC, the SEC is suing Binance and also Coinbase. We know that. It's happening. It's happened. It's going on. Yesterday, they put, 13 different charges against Binance, and I believe that we have fewer against Coinbase. What is interesting though, and that I have seen on degen Twitter, is that some tokens are listed in both and some tokens are only listed in one or the other, even though they're listed on both. So some people are feeling a little bit of FOMO about whether their token's going to be a security or not.
Yeah, I'm not sure if it's FOMO or maybe a lot of fear.
Yeah.
I mean, okay.
Fear of fearing out.
So we'll talk about this again, and I think it's important to put this in context. So what happens if a major token is deemed a security by the US? So the first answer is initially it's delisted off any US exchange, any exchanges that support US people. Okay. And the other thing is it'll probably end up off of permissionless dexes. I would suspect that those dexes will not want to list it if will remove it or somehow require it to be removed from the dex, unless they KYC to ensure that it's not US people. I think that's probably what's going to happen. Is it going to kill the project? I think short term we'll see, typical nonsense. I mean, Binance and Coinbase CEOs together lost a couple $2 billion in the last 24 hours of personal net worth. Obviously, we're going to see stocks go down. We're going to see tokens go down in the short term. In the long term, is it going to kill a project? I don't think so. The project itself, they're probably, I don't know this, if everything is deemed to be a security, there will at some point be a timeline where, there's a path for if you are deemed to be a security, how to come into compliance, I would suspect. I don't think they're just going to go and sue everybody, because that would be kind of insane. Then again, this whole situation is a little insane. Yeah.
And they are technically accusing Coinbase and Binance of different things, right? Binance is being accused of being an unregulated exchange amongst 12 other things. And Coinbase is being accused of operating as an unregistered broker. So it's possible that they'll find a few other niggly ways to, I guess, just to find out how they're going to win a case, right? Because Ripple has a different accusation. Gemini has a different accusation. Who else do we got? Didn't Kraken get served? And none of them are exactly the same.
Kraken paid, but yeah. So anyways, I think a lot of people are jumping to an illogical conclusion here that, okay, they're sued. That means it's true. It's going to happen. It's by the time that this sorts itself out, we will have regulation. Like this will be in the courts forever. Binance is going to fight it. Coinbase, obviously, on behalf of the space as a whole. Credit to Armstrong for reinforcing that every time he talks about it. But it's
also going to take forever. Like it's going to take so long. They just picked the longest way to find regulation ever.
Well, I think what's going to happen is it's going to force, like this is going to cause a pretty good upheaval, because all of a sudden, if you're a US person, you pretty much can't participate in crypto at all anymore. Like not quite yet, but it will be pretty quick.
There. Yeah.
And so there's, there's upwards of 30 to 40% of the US public that currently holds crypto assets. So that's a big piece of the voting population, right? That are going to be annoyed by this. So
there's another element here where people are comparing Binance and FTX to one another. And they're saying that FTX didn't get sued. They just got shut down. So like, what's kind of the difference here?
Well, no, FTX got sued. They just didn't get sued before the collapse. They got sued after the collapse for what caused the collapse. So, I mean, there was some speculation today, well, some accusations coming out from the SEC that Binance commingled $20 billion of apparently customer funds with their payments to Paxos for the issuance and management of BUSD. It's my understanding. That's a bold claim. $20 billion of commingled customer funds is much more than FTX. And that's just, I believe, Binance US. Don't quote me on that. I couldn't find definitive information on it when I was looking. But nonetheless, I think it's going to be interesting how it plays out. They're making some pretty bold claims. The common consensus from anybody that I've talked to is that they're never going to win that lawsuit. I'm not quite so confident. I think the SEC might be able to convince a judge somewhere that that doesn't understand crypto, that this probably could be considered. So all of them, not all of them, but there's a lot that don't get it, I don't think. Now, judges are intelligent people. They can probably figure it out if they take their role seriously in being unbiased. We'll see. All of that to say, I still think all this does, to spin this positively a little bit, all this does is it puts a lot more big players in the ring with the SEC, which is good, in my opinion. There's a lot of resources to push back on the SEC amongst those groups. And secondly, I think it's invariably going to force Congress's hand, which, again, we're not going to love it when regulation comes in. I've seen a few bills that are, kind of coming out of committee and different things. And I'm not sure if I can share the analysis, but anyways, we're probably not going to love it as a space because it's going to require some headache. But I mean, let's just go. Like the silver lining here is like, hopefully this expedites getting some regulation. Hopefully there's some protection for people that were living in the gray area. I don't think SEC is going to win against Coinbase. I mean, Coinbase has a million different licenses. They have broker dealers. They have ATS licenses. They have money transmitters. Like they've got the whole gamut. They've gone directly to the SEC saying, here's what we're doing. Can you please give us feedback if you're okay with it, or tell us what we should be doing, which they've never done.
Instead of getting sued.
Yeah, but instead they're just getting sued. So, I mean, I think there's probably a strong argument for Coinbase that, what else can you expect them to do? Now, Binance, on the other hand, they have some pretty incriminating information from like compliance officers saying essentially we're never going to be a regulated exchange and yada yada. Again, I'm paraphrasing, but yeah, it kind of sucks.
All right.
Anyways, okay. So
I want to FUD this a lot. There's so much FUD here because there isn't a lot of new news, but we're going to see it in the news constantly. And so I'm going to get my kicks from all of the wild quotes that people have. Because to create news, to fabricate news, journalists and publishers and content creators are just going to start asking random people for their opinions, which I guess is what we're doing by asking Gary Gensler anything anyways. So the first one who this is a pretty legit quote is from Sheila Warren, the chief executive of Crypto Council for Innovation. Fine, that seems like a reputable source where you might actually want a quote from them, but they don't have anything. She doesn't have anything specific to add. I mean, it's a cool quote. We're seeing the potential erosion of one of the major tenets of our jurisprudence and a possible change in the scope of authority of administrative agencies. It's going to be wild, but we already know that. We've been talking about that for months, literally months. Where is it going to be the SEC or is it going to be the CFTC or is it going to be somebody else entirely? Are they going to enforce? Are they going to regulate? Are they going to sue everybody? What does it look like? So I want people to know that as this news comes out, that you shouldn't just fall into the hype and FUD trap, right? You need to consider if it's new news, if the person who's giving a quote has anything reasonable to say, if you believe that person, because I think there's gonna be a lot of news fabrication about this going forward, which is why I'm annoyed as all get out.
Yeah, I mean, it doesn't help. Like there's some pretty interesting quotes from Gensler that are really. So from now on, we're gonna refer to him as Mr. Burns because that's exactly what it reminds me of.
Except I think Mr. Burns would have had a better handle on crypto.
Actually, Lucas, one of the founders of Moonwell, has if you check out his Twitter today, he put a really good post about Mr. Burns. So credit to Lucas. I stole the Mr. Burns thing from him.
Thanks, Lucas. Okay, I love that there are so many quotes because obviously Mr. Burns was just talking for a while, but things like the investing public has the benefit of U.S. securities laws. Crypto should be no different. Some of these things are things that we've heard him say before, but that he doesn't necessarily have any grounds to say. But then I also like the fear mongering of it. Like these trading platforms, they call themselves exchanges, are commingling a number of functions. And it's like, they call themselves exchanges? Like,
I'm more.
Like, what are you fear mongering? Like, what's going on?
Well, because what he means is securities exchange. Like, they didn't say they were a securities exchange. They said they were a cryptocurrency exchange. So he's not wrong. They did say they're an exchange, but they didn't say they're the exchange that he is responsible for regulating. What I think is interesting here, this quote just irks me, where he thinks digital tokens are essentially unnecessary. Like
that's the one I was waiting for. It's my favorite one.
That reminds me of like my grandparents saying smartphones were ridiculous, and now they have smartphones 100%. And they're on them more than we are. Like I'm
gonna have to like deep fake myself to be Mr. Burns so that I can, as Mr. Burns, say, look, we don't need more digital currency. We already have digital currency. It's called the US dollar. It's called the euro. It's called the yen. They're all digital right now. What? No.
They're digital fiat facilitated by SWIFT and other, interbank transfer structures.
I think does kind of bring up why this is happening anyways, right? Is the people who don't understand crypto don't understand why we would want a new world order or a revolutionary solution for finance. And so we end up being under the same regulation and jurisdiction, and traditional finance will prevail.
Ocean Block, quick shout out. Ocean Block, what's up on Twitter? Thanks for joining.
Ocean Block, you joined at my peak FUD. Usually I'm the optimist here, and today that is not.
Yeah, we're just talking about Gensler, so it's hard to not be FUDdy.
I'm tired of talking about Gensler.
Okay, fine. Let's move on. Well, this is somewhat adjacent to that, but
it is. So the only good news that I have from all of this ridiculous FUD is that because people are terrified of Coinbase and Binance and crackdowns and so on and so forth and the SEC, somehow we're seeing a surge in DeFi. So people need somewhere to put their BSC, and so they are bringing it over. In the last 2 days, we've had an increase of 53 million of trading volume.
DEX trading volume, which isn't like actually that substantial considering there's like billions per day of trading volume on DEX. It is exciting. And this is like continuing to happen, right? Because every time any one of these centralized institutions has issues, often when they're trying to figure it out, and they tried already for a restraining order on Binance, and Binance says they're forget the restraining order. We don't have to listen to it. I don't know how true that is, but they wanted
they don't have to. There just will be repercussions.
Well, they wanted all activities on Binance to be immediately frozen, which Binance obviously said no. We'll see. I mean, but what most people are doing is moving assets off of centralized exchanges if they're confident they can manage private keys and security and all of this stuff. I mean, this is the inevitable.
I love it.
I
love it. Gary Gensler says, why do we need digital tokens? And humans are like, I need them now. You must have my digital tokens now.
I need them and leave me alone.
Okay.
So yeah, go ahead.
The other juxtaposition here is that we're seeing this influx due to the SEC's actions. And what the SEC was trying to do is fearmonger and prevent us from exactly having these actions. And actually earlier this week, this is a little bit of old news now, but there were quite a few articles about how DeFi activity was still declining.
Yeah.
And now
yields in DeFi have become ineffectively low, right?
Yeah.
So, I mean, it's really hard now with the risk-free rate of U.S. Treasuries. I mean, you can get relatively short-term Treasuries for, north of 5% right now, which, I mean, we could spend a whole show talking about whether we think Treasuries are overvalued right now and what's going to happen with the U.S. credit rating. All of that aside, I mean, that's as close to risk-free as you're going to get today without, even holding fiat is potentially more risky than holding Treasuries in some ways. Probably the same, but there's a return on Treasuries. And so anyways, all of this to say that now the risk premium to take smart contract risk and all of the other liquidity risks and different things that you have in participating in DeFi, the opportunity cost is too big. Yeah, I mean, you can go, you can't get 5% yield, real yield. You can get inflated emissions-based yield, but that's obviously not sustainable. And so it's kind of damned if you do, damned if you don't. The only way to increase that is to jack up the borrow rates so that you can pay depositors more. But there's not enough secondary DeFi yield to substantiate a 15 or 18% interest rate on borrows. So I'm just talking about borrow lend. This is like across the board. It's challenging. Yields aren't high enough because demand and activity just isn't high enough. And so that's pretty standard. This happens it happens in different ways every cycle because DeFi wasn't really a thing prior to the last cycle, a meaningful thing. But yeah, I think we'll continuously see this where yields go down until we come up with better structures of pricing and.
Okay, so yes, yields have gone down, but earlier this week there was quite a lot of news about how ETH is going to be revitalized by LSDs, and I think some of that is just some really good news mongering by like POSA and other LSD companies. Yeah, I think some of that is genuinely what this is because we are going to see other LSD projects launch as time goes on because that is kind of like the next element, the next realm of blockchain finance that is becoming popular. So we have the SEC saying you really got to stop investing in DeFi. We have our yields down, so both of those things might entice somebody to pull their tokens out and I don't know, invest in a CBDC or something. But then on the other hand, we have new technology coming out all the time in crypto. So for the risk takers or for innovators, it is still a really viable place to put our money.
Yeah, I mean, this is an interesting one talking about liquid staking. Again, we could probably spend another show on this, but I mean, Ethereum obviously has a lot of excitement and fireworks with the L2s, scaling and so on. But they still have a fundamental issue that a lot of value is now accruing to L2s, which are kind of the antithesis in many ways of Ethereum, in the sense that most of them are highly centralized in a lot of ways. And, it's kind of goes against the ethos of Ethereum. The point being here is that they need to find Ethereum mainnet scaling solutions. I think that's the bigger concern. Liquid staking derivatives, I'm a big fan, obviously. I don't like calling them LSDs, so maybe we should remove that from our...
That has been the agreed upon term by the lobbying groups. That's what you get.
No, it was LST, liquid staking token.
No, you don't want it to be an LSD because then you are establishing that it's a security.
Okay, well, I thought it was the other way around. Yeah, okay. Anyways, regardless, I think they're obviously adding to the problem that we explained before liquid staking assets can become a good base yield, real yield, from which you can build other, DeFi financial products, which is really interesting. They need to get to a certain scale. The only ecosystem that's meaningfully at scale right now is ETH. And we're starting to see some interesting things be built on top of liquid staking assets, including eigenlayer and restaking and some of these other things that are pretty interesting for shared security and all of this other stuff. So definitely a lot of excitement happening, but I think ETH, and anybody at ETH Foundation or anytime you see them talk about it, they'll admit the same thing. There's a lot of work still to be done. It's very difficult to retrofit the plane while it's flying. And so they've definitely got their work cut out for them. But yeah, there is some glimmers of hope. There's a lot of really interesting products and tech being built that I think is quite exciting. So yeah, there we go. A little bit of excitement.
We're also seeing that there is probably going to be more crossover between something like a CBDC and DeFi as time goes forward. Cosmos has finally integrated USDC, which is apparently impacting our DeFi market. Yes.
So native USDC, this is through Noble, which is different. It's not quite the same structure as using Circle directly, but Noble is a reputable firm. And offering native USDC in the ecosystem is huge because then you can significantly completely reduce bridge risk. And there's a bunch of other advantages to native assets. The other problem with Cosmos is many of the Cosmos zones are lacking connections to other ecosystems currently. The bridging is starting to come. Wormhole's launching their chain, and they're gonna bridge into Cosmos, and then via IBC they'll be able to send assets from their chain to any other zone inside of Cosmos, which is really good. But having native stables is huge. It's a very important step in scaling and DeFi. So I'm excited. Obviously, we're supporting a few projects launching into Cosmos through Roll Blockchain Labs. So this is a big deal, in my opinion, for them.
Yeah, it's a big deal for us, but it's also a big deal for Cosmos. I mean, the further I dive into the Cosmos ecosystem, the more huge I realize that it is. Yeah, and that interoperability is going to be massive for them, right? Like being cross-chain is really critical, and something like USDC nails that.
Yeah, Cosmos is really investing in partnerships to lean into the kind of interoperability, multi-chain access to other ecosystems. Again, Wormhole is a big piece of that. There's some really interesting cross-chain lending structures that are being built right now. So yeah, I think there's a lot of exciting stuff. If you're bored, look into Cosmos. It hasn't been that sexy, hasn't been in the news.
You don't even have to be that bored. It's pretty cool.
Yeah, or even if you're not bored, you can check it out. Okay.
The next one is about Swift and Chainlink. I was originally going to leave this for our crypto arms race episode on Thursday, but I thought it was important to talk about in terms of DeFi because of USDC and because of the SEC. Basically, Swift and Chainlink are working together now.
Yeah, I mean, Swift has really been trying to somehow get an edge here. I mean, Swift is a big reason that crypto exists. So I think they're going to have an interesting hill to climb to get meaningful adoption. It's smart from Chainlink's perspective. They're hedging bets, I think, and Swift is a good partner to test out CCIP. This to me doesn't mean CCIP, cross-chain interoperability protocol, which is like a new product from Chainlink that we're actually looking at doing some stuff on CCIP also, which is kind of interesting. But all of that to say, I think this is smart from Chainlink's perspective. I can see why Swift is trying to do it. It's probably not an either or, Swift or something else. It's probably a combination, right?
I imagine so.
Yeah.
I just think it's interesting to talk about because we have, Swift is reputable, right? People believe in Swift in traditional finance. And so we have everything going on with the SEC where they're like, pull your money out. And then we have all of these weird technology innovations that a TradFi person or somebody who's, kind of a layman in finance is gonna be like, what's an LSD? I don't want to do that with my money. And then we have Swift trying to onboard themselves. So I don't know. I feel that the market is in this really weird Venn diagram today where everyone's trying to pull apart.
Who are you, Kamala Harris? Venn diagrams? Have you heard that? Kamala Harris is always talking about Venn diagrams. It's ridiculous. It's become a meme. So now I'm going to call you Kamala from now on.
I have never seen that because I'm not American. But I feel that everyone's trying to pull apart while still having a little bit of overlap, and they're not sure what that overlap is actually going to mean for them.
Yeah.
So
I'm positive on this in the sense that, we are still talking about how to get, traditional financial institutions and banks into blockchain. They already use and love Swift. They're happy about it. So I don't think Swift is going to be the only option. I don't think it's going to be the only way that, real world and blockchains connect. But I think it will be an important one, whether we like it or not. Because
I also wonder, is onboarding TradFi to DeFi the answer, or is that just going to make blockchain finance TradFi?
Yeah, I think I've been talking about this quite a bit. I think it's a bit of a hybrid model. I think in a perfect world, DeFi will look more like TradFi than it does now, and TradFi will end up looking a little bit more like DeFi than it does now, and we'll have kind of
and we'll call that blockchain finance.
Yeah, we'll have like an interesting hybrid in between them, right? Where you take the innovative advantages of blockchain and add that to the precedent of the last couple hundred years of modern capitalism and traditional finance, and you kind of get the best of both worlds. That's the idea, right? You don't got to throw the baby out with the bathwater. Just replace the things that were inefficient and that people really care about. Transparency, obviously, composability, those are big. Barriers to access, 24-hour execution, near instant settlement. You're not waiting for days for clearing to happen and all this other crap. In a perfect world, but there's a lot of work that has to happen there, because regulators first, they're just going to say, hey, let's figure out how to regulate the assets. Then the next step is going to be, how do we regulate platforms and protocols and activities? And there's going to have to be some nuance and bespoke. There's going to have to be some bespoke bespoke regulatory structures for things like clearing and other things, because the traditional version of clearing, although relevant, is way too long. It defeats the purpose of near instant settlement. So anyways, all of this to say, there's a lot of work coming up, but I think it definitely is interesting. Institutions coming into DeFi, I think is big. We didn't really see a ton of that in the last cycle, contrary to what people wanted to believe. And I think my thesis on that, and I'm a bit of a stuck record on this, is because we've got the early adopters and innovators in the space already. And until we have some sort of regulation or some sort of sense of security greater than what we have now for your assets and your activities and compliance and regulation, I don't think we're going to see a ton of institutions meaningfully participate. They're waiting on the sidelines until they know the rules of the game, and then they're going to figure out how to exploit their advantages wherever they can, which is
not surprising, right? They are generally quite risk adverse. Like, we know that.
Well, and I mean, their ultimate fiduciary responsibility is to their shareholders. And as we're seeing, Coinbase trying to move into the market, which is what made Coinbase, but at the same time, their share price got freaking hammered. So now all the banks are going, whoa, whoa, whoa. Mm-hmm. We don't want to get wound up in one of these things. And then we've seen, unfortunately, the Ontario Teachers Pension Fund and California Public Service Pension Fund, they lost hundreds of millions in FTX and others. Because they were betting on what they thought were the safe quasi-regulated platforms, centralized platforms. Turns out that wasn't the way to go, because they
also if we banks fail from bank runs, of course we're going to see other financial platforms fail in similar ways. Absolutely. Like, nothing is guaranteed, right? Everything is risk.
Absolutely.
Anyway,
but you still have to. Crypto Games is here. What's up? Thanks for joining. Good to see you.
That's our episode today. Tomorrow, though, we're going to talk about the crypto arms race a lot. I have everything. I have everything from crypto and olive oil to what the G7 is up to. So
for anybody that doesn't know what the crypto arms race is, this has become a bit of a theme on the show. We talk on a relatively regular basis about what other jurisdictions globally are trying to do to make their country or area I
want to know who's going to win the crypto war.
Tractor for crypto, yeah. Like they're trying to outpace the U.S. and currently everybody's winning. The U.S. is going backwards, and everybody else is going forwards. And in Asia, we're seeing crypto opening up. We're seeing like China a lot more open to it. Hong Kong, Singapore, Philippines. Like we've seen so much. Japan is opening up opportunities for people to figure out.
Get a lot of Nigeria now.
A lot of African support, even the EU and MICA and so on. Yeah. Like we're seeing this everywhere except for the US.
We had an Australia episode recently, but because there's listeners, I just wanted to say we do degen news on Wednesdays.
Do, 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 do.
We do degen news on Wednesdays. So if on Tuesday and Wednesday you have anything that you want us to cover, let me know. And then on Thursdays is crypto arms race. And on Fridays, we say F you to somebody we don't like.
Awesome.
That's what we do on the show.
That's what we do every day, Monday to Friday, 12:30 Eastern, same place. Twitter Spaces. It's on Spotify. We're on YouTube. We're on LinkedIn, Facebook, Twitter live video.
Anywhere.
We are freaking everywhere.
JD, you are muted on Twitter Spaces, by the way.
Oh, son of a bee. Someone called me and it totally screwed me up. Okay, so for those that didn't hear me, I'm going to repeat it. Monday to Friday, same place, 12:30 Eastern, every day. We're on episode 78 or 9 today.
Or 80. Who knows?
We are not slowing down. We're going to keep going. It's been a lot of fun. It's picking up pretty good traction. Actually, we get a decent amount of views and engagements and stuff, and things are growing. So we don't get paid for anything. The only thing that we do is I wear merch that I get for free. That's it. And then we do shout outs to the companies. So anybody that wants to send merch, hit me up, send me merch. I'll wear it on the show as long as it's
Or
nice.
if you want me to wear merch, I'm much.
She'll wear merch too, but usually, unfortunately, there's not a lot of female merch. That's like,
I know, most of it sucks.
It's crap, right? Like it's super boxy and looks goofy.
Yeah, most of it sucks. That's why I don't wear most of it.
Anyways, everybody.
All right.
Thank you guys. Thanks for your attention.
JD,
What?
go FUD yourself.
Go FUD yourself, Kiara.